On today's episode, I'm going to take a look at two popular stocks that just IPO'd and just came out swinging. The first one is going to be Airbnb and the second one is going to be Doordash. So on today's episode, we're going to take a look at a few things. First, I want to look at some of the bullish notes for both these companies. Then I'm also going to take a look at some of the bearish notes. It's good to always see both sides of the story to see which one you are more likely to follow. At the end, I'm going to give my overall opinions and see if I believe that Airbnb and DoorDash are overvalued or undervalued at the moment. And my answer might completely shock you. Like always, my name is Jose Najarro and I am a self-taught investor. I've been doing this for the past 6-7 years right now, just learning about the market. Before we start, make sure to smash that like button. It helps so much with the YouTube algorithm and I truly appreciate it. Also, if you ever want to know when I buy or sell stocks, make sure to go to my pinned comment or the descriptions. I have a link to my Discord channel. It's free to anybody that wants to join. We have over 1,000 investors there. Also, don't forget to sign up to Webull using my link. If you sign up and deposit $100, we both get a free stock. I think right now they might be doing a special where we might get 2 or 3 free stocks at the moment. And finally, if you want to learn more about becoming a better investor, make sure to check out my Patreon. I'm dropping a lot of educational content there. I just released the introduction to the financial statements, and in my next series, I am going to be doing a more advanced course on those financial statements of what I'm looking at during earnings calls. What are the most important to me? So make sure to check that out as well. All right, so first let's start off with Airbnb. This is ticker ABNB. Right now it is sitting at about $148.62. At the time of this video, it is up 2.7%. Right now the market cap is $88.73 billion. So Airbnb, the original IPO price was, actually I don't think this was the original. The original was cheaper than this. Latest IPO price range before going public was around $56 to $60. That gave Airbnb a valuation of $34.6 billion. You can see it came out swinging, going to $150. I think that around $155 was the opening price, almost tripling the original valuation. And one thing I am saying, I'm seeing very impressive in Airbnb is this compound annual growth for the next 5 years is expected to be 36%. That is what I consider a super growth stock. The second thing is right now they're not hitting the markets they're expected of the total addressable market they have. In 2019 they were hitting less than 1% of their total addressable market. At the end of 2024 they're expected to hit around 5% of their total addressable market. So we can see this is insane, the amount of revenue growth this company can see in the upcoming years. And even in 2024, they're only estimated to hold 5% of the market. So we can see why investors are very excited with Airbnb. Another bullish case is the amount of listings available compared to its competitors. Airbnb right now shows to have the largest amounts of rooms and listings in the millions. It has about 7.6 million. The next comes at Booking.com doing 6.2 million. Then we have Marriott, for example. Marriott comes in at 1.4 million. We have Hilton coming out at 1.0 billion. We have Hyatt Hotels coming in at 0.2 million. So we can see the type of strength this company has in forms of listing. Now let's take a quick look at the second company. This is DoorDash. DoorDash right now is sitting at $173.95. It is down about 7% for the day right now. And it has right now a market cap of $55.26 billion. It is a bit smaller than Airbnb right now. So DoorDash sold shares at $102 a piece in its IPO. This is above the range of 90 to 95 according to people familiar with the matter. And we can see the IPO price was at 102 when it was above the range of 90-95, and right now the stock price is sitting at 173, almost going double digits again from its IPO price. This is insane, the amount of growth we're seeing from companies right off the IPO price. And let me just say this, a lot of retail investors might be thinking, man, that's crazy. I wish I would have gotten in at those prices. But Airbnb, for example, the first trade was at 155, even though the valuation was, the original IPO was a lot cheaper. The company did not see those levels, right? Those were ones you had to go through their IPO process. But once the company went public, I believe it opened up at 155. So one of the biggest things for DoorDash is the revenue. This most recent quarter jumped 268%. Mainly because DoorDash has been one of the biggest beneficiaries of the coronavirus pandemic. It has forced restaurants to close, like I mentioned earlier, and their dining rooms. So now people are moving to delivery systems right now. I mean, there's not many companies out there right now growing triple digits, high triple digits, 268% revenue growth. It's not something you see. The only other one that comes into mind right now seeing this type of revenue growth is Zoom, and Zoom is killing it at the moment. So now let's take a look at some bearish points and a quick perspective in the real life market. So right now Airbnb is valued at about $88 billion like we saw earlier, and that's $62 billion more market cap than if you add in Marriott hotels, Hilton hotels, and the Hyatt hotels. That is insane. So their combined market cap is still $62 billion less than Airbnb's at the moment. But one thing we did mention that we did see was Airbnb does have more listings. Another thing that Airbnb will likely have is, since they don't really own the property, they have better margins, right? They don't have to worry about other stuff like fixing the house, fixing the hotels, like the staffing. So they have better margins. So because of that better margin, they're probably also seeing stronger revenue growth. So for all those factors, these are why investors are buying into this company, and it's understandable. And now here, DoorDash, so that was pretty much a bearish case for Airbnb. Now let's kind of take a look at a bearish case for DoorDash. So DoorDash right now, their CEO Tony Hsu came out and said that they priced their stock where they did not take every last dollar off the table, but felt like that is a true reflection of their fundamentals. So even the CEO of DoorDash was like, hey, the $90.95 probably wasn't the perfect valuation, but it was very close to what we see our current fundamentals at. So even after saying that, the stock price still almost doubled. So it's originally at $90.95 or 102. It is now sitting at 173, over 80% higher compared to its original IPO price. So I don't think they undervalued it by 80%, right? So when we think when we have to think about a bearish case, things like that have to come into play, right? The CEO himself said that, hey, where we valued it at, that's what we believe our fundamentals are really close to it. But investors said, nope, screw it, fam. We are going to value it much higher than that. So what are my thoughts? Like I mentioned, I am a huge believer in growth stocks. And like I mentioned, I have a lot of growth stocks in my portfolio. I believe that right now, a lot of investors are still too caught up in the typical price to sales valuation, price to earnings valuations. And these valuations, I believe, close investors into certain amount of stocks. And if you were to follow price to sales valuation, price to earnings valuation, one wouldn't be in companies like one wouldn't be in companies like Amazon. One wouldn't be in companies like Spotify, Celsius, all these that have seen Zoom, Fastly, that have seen insane growth in stock price compared to the beginning of the year. And yes, most of them have pulled back a lot, but compared year-to-date returns on these stocks are still doing amazing. Just because I say that doesn't mean that I would buy every stock at any price. I do believe it's always great to enter at a smart price as well. For me, I do believe DoorDash and Airbnb, first let me say, these are not markets I'm completely bullish on. Not bullish on, I want to say, too completely excited about. There's other markets that I'm more excited about than the home rental and the food delivery. That's because I personally don't do much food delivery myself. And I actually, even though every time I travel, I do tend to use Airbnb, it's not something I'm not opposed to using hotels as well. So again, that's more of a personal. I do believe your personal take on the market helps a lot in what companies you invest. I'm very happy about e-commerce, about semiconductors, about artificial intelligence, about technology stocks, because that is the market my education comes from. That's the market I normally see on a day-to-day basis. So I do believe that's a huge reason why I am not too happy about these stocks right now. In the short term, they are going to be very volatile. So I do hope that any investors watching, DoorDash right now, for example, is down 7%. 7% is a big amount in your portfolio. And I do believe days like this will continue to happen for both DoorDash and Airbnb. Not all down days, right? There's going to be some days where you might see 10% up in DoorDash, 10% up in Airbnb. Very similar how we're seeing in Unity, one of my favorite stocks right now as well. But at the same time, if you are super excited about this market, let's say I was super excited about DoorDash, let's say I was super excited about Airbnb, how would I play it? I would open up a small position to get some skin in the game if I was really excited, because you just don't know how, if we are, for example, in a bubble, you don't know when this bubble is going to pop. You don't know how bad it's going to pop, if it does pop at all. One of my prime examples was Unity. Unity was one of my favorite stocks. It could have easily been a tier 1 stock in my portfolio. I believed when they IPO'd, it was too overvalued. So I only ended up entering with a small position, and I ended up dollar cost averaging a bit here and there on a few pullbacks. But I still got skin in the game, so I'm happy I'm in Unity. I'm happy I own that company. But I'm also happy with the amount of position I'm holding, because I feel like it matches my risk tolerance level. Maybe certain investors might have higher risk tolerance, that they might be willing to go a little bit higher on these valuations and a little bit higher on the amount of percentage they want to hold on their portfolio. But as long as you understand the risk. So I hope you guys enjoyed today's episode. Like always, let me know what are your thoughts. Are you doing anything with DoorDash or Airbnb? Take care, guys. Have a good night and see you next time.